What is going on, investors? Hopefully you guys are having a great Friday. That is right. It is time for our FAANG stock recap show where we run down the news and probably more importantly this week, the charts of all the FAANG stocks plus Microsoft and Tesla. If you are new to the show, we will run down the news of all the major companies, what has happened this week, and then finally we get over to the stock chart, which I think is very pertinent this week because all of these stocks, or most of them, Google and maybe Microsoft not in this bunch, but all are in very well-defined downtrends, and we'll decide on today's show, is this nearing the bottom of the sell-off for these stocks? Is it safe to come in here and buy these stocks? What are the strategies that I'm using? Have I bought any of these stocks? We'll answer all of these questions here on the show. Those of you that watch the show regularly know it normally comes out after the market hours. I just want to make note that we are recording this during the trading day. There's still several hours left, so stuff can happen as we record this and after. I have a tea time in about an hour and a half, so that is why I have to record this early. Markets look like they're rebounding a little bit intraday. We'll see what happens going into the close. Facebook started the week at $258. Guess what? Facebook's sitting at about $258 per share right now. When we get over to the stock chart with Facebook, we'll talk about the range that it is in. Now, more broadly, when we're talking about Amazon, Facebook, Google, basically all the major FAANG stocks, is a major White House appointee is a big tech critic. In fact, he wrote a book, The Curse of Bigness, Antitrust in the New Gilded Age. And so this is someone that has been, looks like Tim Wu is appointed by the Biden administration. He is an outspoken critic on Amazon and Apple and Facebook and Google. And if you've watched the show with regularity, I've told you, if anything that you can expect going into the next 4 years with the Biden administration, it is regulation on big tech. And it's ironic that these companies donated mucho dinero to his campaign. And guess what he's going to do? He is going to regulate them. You can almost guarantee that. Moving on to Apple, started the week at a 123, just slid off a little bit. Apple's chart's kind of interesting. It's actually approaching a new level. It actually breached a level that we have marked out, and it is now in a new zone. It's sitting at about $118 per share. The Apple iPhone 13 lineup, which is expected to come out, I would guess, August, September, October, somewhere in that time frame, looks like it's just going to be a refresh of the models. Now you might see a little bit better camera, probably a new chip and things like that, but don't expect any major news, at least in the shorter term with the new iPhones. Apple reopened all its retail stores for the first time since the pandemic. So basically a year's time has gone back. Now all retail stores with Apple are open. Moving on to Amazon. This one slid off nicely. And in fact, when we get over to the stock chart with Amazon, it did touch the bottom end of a zone here. And so this is interesting. We'll talk about what that means with Amazon, but it has slid off kind of nicely. We started the week at 31.15 and now we're sitting right about 39.46 or so. The Pentagon looks like they could pull Microsoft's $10 billion cloud contract. If you recall, this was during the Trump administration. Amazon and Microsoft were looking for this $10 billion contract. It got rewarded to Microsoft when many people thought it would go to Amazon. Amazon's alleging that former President Trump interfered with the fair awarding of the contract. Now, look, I'm not going to sit here and say that doesn't sound plausible. Is it something that they could prove in court? Will it overturn the contract? I don't know. We'll see what happens with this one. Netflix. Ooh, this one slid off nicely. 543 starting the week. It's currently sitting at about 509 when we get over the stock chart with Netflix. Some interesting levels that we're getting to there. Not a lot of news out of Netflix. Moving on to Google. Google has held up. I get comments on my videos. Oh, all stocks are selling off. No, they're not. Apple's doing fine. Google's doing fine. Big Oil is doing great. Bank stocks are doing great. AT&T and Verizon are doing well. Visa stock. All these stocks are actually holding up, and we actually see that with Google. Google's actually up on the week. from $2,046 up to about $2,062. When we get over the stock chart on that one, it's also just held up nicely. Microsoft also held up nicely. Started the week at 233, has slid down a little bit, but we're sitting at 230. It's holding a range, and so we'll talk about that when we get to that point. Now, obviously, Microsoft could lose that $10 billion contract. That would be somewhat tangible to their earnings, but a company this large, not that big of a deal, but it could be priced into the stock a little bit. So if that does get pulled away, you could see a little negative reaction in Microsoft, but I would doubt it would be a big one. Microsoft president is heading back to Congress for an antitrust hearing. This guy, Brad Smith, it looks like he's going there almost like a cheerleader because he kind of supports antitrust regulation, because I think Microsoft's in the position where antitrust regulation is going to hurt people like Facebook, Google, Alphabet, Amazon, these companies more than it's going to hurt a Microsoft. So I think Microsoft's going to go to that hearing as more of a cheerleader. Now, who's not cheering? Tesla shareholders. This stock has been on a free fall. Started the week 688. Currently at a 593 and dropping quick. This thing is in the absolute tank. When we get over the stock chart, we'll talk about, has this approached any levels? Now, from a fundamental perspective, Tesla secures a supply of nickel. This is obviously key for their batteries and things like that. And overall positive news. Ron Barron said he had to sell some Tesla stock for his clients. He says it was quote unquote painful to have to sell Tesla. He personally owns about 1 million shares, but people are getting nervous. Also in a stock like Tesla, it's probably difficult to measure, but I get the sense when I'm reading through the comments on my YouTube channel, a lot of people are feeling the pain on Tesla because they either bought it too high or they're over leveraged. And I think that is exacerbating some of the moves we're seeing in these stocks. Is a lot of people have Robinhood Gold. A lot of people have like levered up their account and they're doing, options and things like that. And these things in the hands of an experienced investor are not that dangerous, but get it in the hands of novice investors and all of a sudden you can blow up your account on kind of down moves that aren't that big, certainly not as big as we saw back in March of last year, but they are being exaggerated, I think, a little bit by margin. Now, over to the stock charts. Time to kick things off here with Facebook. This thing looks like it's sideways consolidating. Honestly, we've sideways consolidated this week from 254, and that's a somewhat big range, up to about 266, about a $12 range here. We're sitting right here on this level that we've marked out at about $260 per share. I was hoping Facebook was getting down here into the 245, 250 range. In my opinion, that would trigger a buying opportunity because you see here the stock reversed here. It's support here. Now, would I go all in on this side? I think what we need to talk about too, when I say this is a buying opportunity, say you have $5,000 left in your Robinhood account. I would not invest. I repeat, I would not invest the entire account down here. Okay, is this a buying opportunity with a 1%, 2%, 3% of that type of buying power? Sure. Is it 100%? This is also where I get the sense when I'm reading comments that a lot of you guys are getting in trouble, is that you are just unloading your entire account when a stock is in a clear downtrend and hasn't really necessarily reversed yet. So you got to be careful about sizing. You also got to I probably have to be a little bit more careful about how I reference these types of points. So when we pull back to these ranges, it is a buying opportunity, but it's not a place where you unload all your margin, your entire account, your entire bank account into those areas, because as when we get over the Tesla chart, it has just blown through that like a hot knife through butter. Now, Facebook's just kind of consolidating here. Not necessarily a buy, not necessarily a sell. If it holds these levels and starts to resume an uptrend back up into the high 260s, 270s, it could be a reversal. We'll see what happens with Facebook. Now, moving on to Apple, a little bit different story. So we've had this level right here marked out for a while. It was a little bit of resistance here once it launched up over here. Now it's acting as a little bit of support. That level is right at 120, 119. That's basically where the stock, you see the stock has kind of wicked through this 119 level and quickly bounced back up to it, or maybe even slightly above. I like Apple down here, okay? And maybe I'm getting too greedy right now, but 108, the 100 to 108 level, this would be a bottom in my opinion. This would be a much better spot to buy this stock. Most of you, like myself, might be overweight Apple already, either through ETFs, individual holdings, or combination of both. So for me personally, this one would really have to pull back since it already represents a large portion of my portfolio. For me to want to add to it even more, it'd want to pull back. Now, we are pulling into this zone between 112 and 119. Not a terrible level if you don't have any shares of Apple and you want exposure. Again, this is one of those moments where if you have $5,000 sitting in your account, 1, 2, 3% of that in a stock like this, not the worst spot that I've seen people step in on Apple. Obviously, worst spot would have been a couple weeks ago up here in the 140s. Right now, the trend is down. I wouldn't want to necessarily step in this one until we start seeing a reversal in that trend. Now, Amazon touched the bottom of our range. Take a look at here. We've got Amazon, bottom of the range was $2,900, give or take a couple bucks. And we see here the stock bottomed out at that range. This was back actually in October of last year, and the stock made a nice little rally. It touched it and bounced really hard. It went from 29 up to about 29.60 really hard. Now, I'll tell you, in my son's account, my sons are both under the age of 5, and they had they both just had birthdays recently, and they had some money in their account, quite a bit of money actually. And so I did step in here and buy them. I bought them fractional shares of Amazon in this box down here, because in my opinion, this is one where if you have a long-term outlet and you're sizing it appropriately, this is where you can step in. Now, I have another account, my own personal retirement account, where I have, I think, 4 shares of Amazon. So I am incredibly overweight considering that's an IRA account where you're limited to $6,000 per year in deposits. This hasn't gone low enough, and it is in just a complete free fall downtrend. I also don't have fractional shares in that account, so it's not one I've stepped into yet, but further downward pressure on Amazon might be one I add to again. We'll see what happens with that one. Moving on to Netflix. Big, gigantic, like a sequoia tree red candle here, and then we followed up again, and it looks like we want to have another red candle here. We've basically bottomed out into this range. We've had these levels marked out for a long time with Netflix down here at 470. In this box, 470 up to 485. That's where my target is with Netflix. A pullback into this box is where I would allocate a little bit of shares. We do have this big, gigantic green candle here, so I would expect some buyers to step in this range as well, and it appears that's what they're doing right at the moment. But I am waiting for Netflix. I'm already long Disney, and I have some exposure to streaming services already. So a deeper pullback in Netflix. Again, this trend is down, and it is down hard. So if that continues, we should get an opportunity for 74.85 with Netflix. Moving on to Google, it's bucked the trend. Take a look. This thing is up in our site, kind of upwards in our sideways consolidation between 215. In fact, it's up on the day. This stock. Look, I don't know if you want to buy it up here. I guess you could. I wouldn't necessarily want to step in here and buy any stocks at the current moment, but this one is held up nicely. And so, ignore the people saying, hey, Tesla's down because the whole market's down. It's not true. There are stocks that are performing very well and holding up nicely, and Google is one of them. The other stock that is holding up nicely is Microsoft. And so we'll pull up that chart right this second. And Microsoft is actually holding up pretty nicely. Now, it made highs back here at 245, and it's sitting here at 231. That's only about, $13, $14 per share. It's not really that much. We see it's holding this level right at 230. Okay, a break of 230 on Microsoft. Okay, breakdown in here. I think I got this also in my son's account. My sons have a Schwab account, and they have that stock slices thing where you can do as little as $5 in a stock. And I'm pretty sure I got Microsoft for them below this 230 line. But here's what I'm going to say about this. Okay, a break of this 230, and then you really right underneath that is 225. So if we slice through 230 and then 25, you're coming back down here to close to this 50-day moving average. This is close to $215 per share. That's personally where I've had this marked out for a while. 210 to 215 is where I personally would step in on my retirement account with this one, but it looks like it's found some footing here with 230. Wouldn't surprise me if it pulls a Google and just kind of consolidates up in this box up in here. But if it doesn't, again, I would anticipate if we get more downward selling pressure on Microsoft, you're probably coming down here to 215, stuff like that. This is really just kind of a hold unless you do a really, really small position like I did with my son's accounts. Now, finally, the last stock that everybody is basically crying about, because I think a lot of you guys are over levered to this stock. You either in options or you bought up here, you bought the hype, you bought after it got into S&P 500, you bought the hype, you thought it was going to go to $2,000, $3,000. Well, it started breaking these levels, and when it breaks these levels, man, it goes quick. You see it tagged actually this level here right at 539. I was watching some other YouTubers like technical analysis show. The 530 level was where some of them wanted to step in. This was a level that, and when I mark these lines out, these are my lines on my chart, but believe me, these are on the charts of probably hundreds or thousands of traders. They might be up or down. Some of them might not have all these lines in here, but these are well-defined lines, okay? This is what professional traders are looking at. I'm not saying I'm a professional trader. I'm just telling you that other professional traders use these same techniques. They might use them better than I do. They might time things better than I do, but I'm just letting you know that everybody is aware of these. So when this stock bounced at 530, 539, wasn't a big surprise. And in fact, we're basically now in this consolidation area between under 600, call it 540 up to about $600 per share. Now, where in the heck do I want to buy Tesla shares? I am looking at this big sideways consolidation zone between, we'll call it 340 up to 440. Okay. I know that's a big range, but again, with a stock that's $300-$400, your sizing should be very, very careful, especially when we're in a big downtrend. If we come down here to 340 to 440, we would be in a bit even bigger downtrend. We'd probably be under this blue line, which is a 50-day moving average. It would probably have turned negative. Everything will have been negative if we come down into this range. But what would be a positive is you'd have all this price action down here. And it was from September all the way to November. So this is several months of buyers down here. And so if and when this stock pulls back, I would expect some of these buyers to step in. If these guys up here sell, I don't care. They bought high and they sold low. Those are what you call newbies or amateurs or people that don't really know what they're doing. I am trying to buy low and hold for a long period of time. Eventually, I'll sell these stocks, or my kids will. Somebody will. So in the shorter term, I'm looking for Tesla between about 340 up to 440. Again, sizing is critical. If you only have $4,000 in your account and it's a $400 stock, I would buy one share at a time. Buy one share, wait a day or two. Buy another share, wait a day or two. If it goes down, buy another share. Do not, I repeat, do not unload your entire account. If you're trading on margin, you should not ever have that maxed out 100%. But I know lots of people are in that situation. And in my opinion, if you want to do that, and if a large amount of you want to do that, guess what it does? It creates big selling opportunities in stocks, and disciplined investors, long-term investors that have cash on the sidelines will come in and get these at lower prices and watch the stocks go back up when people get back into accumulation mode. So that was the FAANG stock recap show. Looks like the market's just kind of hanging out. I wouldn't take too much stock on that. It is a Friday. Wouldn't surprise me if the sellers all went home for the weekend, because guess what? The sellers, people that are short this market, they absolutely crushed it this week. Guess what they're going to do? They're going to be like me. I'm going to be out on the golf course in an hour and a half. I bet everybody else on the golf course in a good mood is going to be a short seller. If you've been long this market, look, you got clobbered the last 2 weeks. I wouldn't take stock in one day, especially a Friday where things have been good. Again, the guys that have been making money the last 2 weeks are off to the Hamptons, off to the golf course, off to their yacht, wherever it might be. Okay, so I wouldn't take stock in one day. We'll see what happens heading into next week. One thing is for sure, we'll be back again next Friday, probably at our regular scheduled time after the 1 o'clock, around the 2 p.m. Pacific time publishing date on this video. Thank you, everybody, for watching. Good luck with your investments.